Good morning, everybody. Welcome to Phoenix Trading Strategies, where strategic knowledge and information allows you to trade successfully. Today is September 21st, 2015. It is 9:05 a.m. Eastern Time. For those of you that are here for the first time, welcome. For those of you that are back, welcome back. So before we continue, let us go to the disclaimer. Disclaimer. Future stocks and spot currency trading have large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in futures, stocks, and forex markets. Don't trade with money you can't afford to lose. This website is neither a solicitation nor an offer to buy sell futures, stocks, or forex, and no representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this website. Past performance of indicators or methodology are not necessarily indicative of future results. Being that said and done, let's go back to the home page. So, make no mistake, this is a financial war, and you have been given no advantage. One could even say you have been sabotaged with the wrong information. That ends today. Today, we show you why they're providing wrong information and how you can get right information to make better decisions in order to define a better entry, define your risk with your stop loss, and define a potentially good take profit target. At the end of the day, that's what this comes down to. A plan of action. Can it work for me? Can it work for you? The answer is yes, it can. And it has been for a lot of people. So let's go to the calendar and see what we have for today, these next few days. So this morning we have existing home sales, and that'll make a dent. We'll see how that comes out. And then today, later on, around 1 p.m. Eastern, we have FOMC member Lockhart speaking. We've already had Canadian wholesale numbers come out this month. The Euro, the BOBA monthly report, the PPI, producer production index came out already. So not a whole lot of news, but it wasn't great for the Euro. And it wasn't good for the Canadian. So we'll see how it reflects in the markets very, very soon. Tomorrow or tonight, quite a bit of information. Japan has a bank holiday, so that'll slow things down a little bit during the Asian session. You have HPI for Australia, and then you got China, and these normally move the market very significantly. And then in the later morning or early morning on Tuesday, you got trade balance for the Swiss, public sector net borrowing for the UK, CPI industrial order expectations for the UK, HPI for the US, and consumer confidence. And that also is very important. Consumer confidence is going to determine a lot right now because it made a big difference for the decision process for the Fed to not raise rates. So we will definitely be looking at that very, very closely. So let's go real quickly to the charts and see what we have. All right, let's go to the higher time frames. Let's go to the 15. Right now, this one actually looks very, very good to the downside. This is the US yen. And I say this because it's trading right off of a daily level, which is at 120.49, which was identified by our power dots. So I want to go even a little higher to see. Yep, right here. Give me 1 minute. I'll be right back, guys, okay? Just 1 minute. Okay, sorry about that. All right, so yeah, this one looks pretty good, and it's at a price level where they make drastic decisions, and I'll show you why. Let's go back. History tells us a lot. It's very beautiful when we see history. Now, you see here, let me put a little circle around this bad boy. See right here? Look at this little section. See how they use this price level that whenever they break through it, they're very aggressive. And whenever they came down from it, the next candle was very aggressive to the downside. Now look here, see how they used it as a support level? And when they broke above it, the next candle just boom, went to the upside. And the same thing here, and the same thing here, and definitely the same thing here. Here it came up, but then the next candle was very aggressive to the upside. Well, now we're seeing the same thing happen here. It didn't break to the next level. It held here, and so now this one's coming down. Very significant when you see that. Now, would I have preferred if price action would have come all the way up here to define the trade here? Yes, and the reason why is because here they would have hit a brick wall. They would have hit another daily level, a monthly level, and a 720-minute level, to the 12-hour level. So this would have been very nice, and you see how it reacted here, that as soon as they broke below, they never looked back. Very aggressive trade. So this one's a little bit more consistent, as you can see in how they've traded it before. Very nice, very organized. So, but now it's time to look for more evidence and see, are there any power dots at that level that we could use to define this trade? That is the next question. And so that's what we're going to look for right now, is evidence. But this trade looks to be like a trade that could work. Now, the fact that, here, for instance, it made a move to the upside by this right here is pretty much to the downside, and I'll explain why. You see how the trend stop here, and I'll expand this further. See how the trend stop here, and I use this as a trend stop, has been used as a resistance level along with this daily level. That makes it very valuable to me. So right now, it's just a matter of, I'd like to say, time before this actually reverses and comes down. So we're going to wait and see if they're going to retest it, and if they retest it up here, how much. But in reality, even the moving averages, the minute that price action breaks below right here, it's going to come down to 120.09. Not a bad trade. Not I mean, I'd like to say it's a 30 pip trade. Not bad for the morning, but at least it's defined right now. So now it's just a matter of finding and fine-tuning the trade to see where it's heading, because this already finished. This trade happened during, let me see, during the European session. You got the signal to go long, and it went long. But right now, I'm looking for signals to go short, because I know that that's what they're planning on doing. I think the move to the upside is pretty much dead at this point. But let us continue. 30, no. 60, no. There has to be, in the higher time frames, something announcing a yes. Let's see here, for instance, they did come down, fulfilled its cycle. Now it's up, but it's not done yet. Let us continue. Here, 120. What did I tell you? And we will mark that. A 120-minute, and this thing came in. Yeah, beautiful. Cannot go wrong with a 120. Whenever it's a 2-hour level. Uh-oh. And 2-hour levels must be respected. Why? Because when they come out, they define the trade and they don't apologize for it. We also have it in the 180. Beautiful. Right there. So this is going to happen right now, this morning. So that means that they must know something about consumer confidence that you and I don't know, or about home sales. So now we have that there. Let's continue. Oof, and even on the 240, wow, way up here, but it's supporting these levels down here. Yeah, this is a trade that we are definitely going to be enjoying this morning. Nothing here. Let's see, 480. Nope, nothing here. Well, we don't need to go any further. We found our excuse. You have a pivot here, and I'm waiting for this. See how this one is trading right below this pivot right here, 120.41. That to me will be a defining factor. But let's go to the smaller time frame to define our entry. And if this thing loses steam here, it's done. There is no tomorrow for it. Because the minute they break this level, it's on. And I think they're going to break it real soon. Now it's trading right now at 120.40. Stop loss should be at 124, above 120.47. I'd like to say 120.50. So 10 pips would be the risk that we would be exposing. But even now, I still want to go into the smaller time frames and see what am I missing here. Okay, so they're above this price level. This is the one that has to be broken right here, which is 120.39 to the downside. And they already made an attempt once to do it and hasn't done it. So now we're at 120.42. And that means it's got to come all the way up here right now. So we're going to wait. See, this one right here is a defining. It would be actually here, 120.43. And if it breaks through that, it'll continue to go up, and I'm okay with that because I know that the overall play is to the downside still. So we're still looking at it. Yeah, the 200 moving average is right here. So we have to wait. It's not quite ready yet. We're waiting. Remember, you're hunting for the right moment. So let it happen. Give it, let's let it recycle up one more time. Not be desperate to get in and expose ourselves yet. We need to let them expose their trade. I still want to see how they react around this daily level. And right now it hasn't been defined quite yet. So you go into the smaller levels. But see, even here on the smaller time frames, I mean, this level came out, and I think here is where it ends, right here. Yep, that's where it looks like it will end. And that means that, let's see, I want to time this right. So I want to see what they do and when they do it around this level. This is the level they have to surpass, the price level, which is 120.44. If they don't surpass it, then basically that means that they're going to bounce off the trend stop to the downside. Ooh, powered up in the small time frame, and there we go to the next one. Let's see. Quite honestly, I wasn't even considering the U.S. yen today as a trade, but since they're playing at a specific price level that I like to see, that basically has demonstrated the interest that someone needs to rebalance risk. So let's see how they do it. If they break this price level, 120.44, then they got to go up. But if they don't, then that's it. And that could be the deciding factor for us. So sometimes you just have to wait for the right moment. I don't think it's going to surpass this level. And if it did, my risk would be no more than 8 pips at this point. So, come on. What are you going to do? Give us a hint. Yeah, you're not going to do much. And you got 40 minutes before the announcement. So let's see you play your play. Oh, there it is, 120.44. If it breaks that level, then we know it's on to the upside, and it'll come all the way up here again. Now wait for it to come all the way up here before I take that thing short. So come on. Play the trade. Ooh, power dot. Naughty, naughty. I like it when it formed right there. So we'll see how far this thing goes. And that means that eventually it should come down. So I broke the 120.45. Let's see. We'll let you go up just a little bit more for a better entry. We'll see if you got what it takes. Sometimes you just gotta wait for it. Let's see, what are you gonna do? What is your plan? And that's mine too. Alright, so I got in at no buy, hold, sell trade recommendations. I went short here at 120.44. And we know that if it comes down, it's going to come down like a stone from this point. What would be my risk here? My risk would be placed here, right above this specific level. See how these wicks are here. I don't think, and you see how these candles are trading right here, for instance. See, this is a deciding factor for me. So 120.48, so I'd like to say that risk in this case would be 4 pips. Don't think they'll spike up, and the only reason why I don't is because the trade has already been defined. You can see 3 levels here of power dots in the smaller time frames. So this is now just a matter of time of letting it play out. Now we can go to the bigger minutes and see, okay, what's your play? And here, for instance, I guess not here, but we knew that it was coming down. I'm trying to. I'll feel more comfortable once it breaks below this price level, which would be 120.40. Once it comes down below 120.40, then at that point I know that it has to come down to the next level, which in that case would be 120.31, which will be right at this dot. And then, of course, next level, which would be right here, 120.22, and work its way down until we finally see it come down to 110.10. But it may even break this level, because this level is not a support or resistance level. It is what we call a mid-range level. So let's see, we got a question. That's a poker tell, huh? Power dots at resistance again. Yes, indeed. The fact that we had power dots up here in the smaller time frame made a big difference. And sometimes, and for instance, here we have one here, but this doesn't mean anything because it's in the middle of a range. If it was up here, I would be jumping all over it. But here we have a pivot, so it did come down, retested, came down, and they never really quite came up to 120.48, which was where this 2-hour level is. So for all we know, they're going to use the news right now as the catalyst to drive this thing. And the news is existing home sales. Expected, or let's see. The previous number was 5.59 million. Forecast is 5.50, and they may expect less. So we'll see. But remember that if the U.S. dollar gets stronger, it normally is with news like this. It normally gets stronger against other currencies. The yen has been, for some reason, just adding more and more value to it. So makes a big difference. But let's see. So let's go over the indicators. I think it's important to understand. So these are trend. This is a trend stop, and just like that, it's meant to keep you in the trend. These are pivots, these little magenta dots, these are pivots, and these are very valuable because they tell you the next price level that it's going to go to. So for instance, here it went from, in this case, from 120.50 and now to 120.40. And the next one is, let's see, the next one, oh yeah, the next one is right here. Forgive me, my fault. The next one would be right here, 120.13. So that means that, this for us signifies a nice 30 pip trade to the downside if it continues on its path. And if it surpasses this level, then at that point, then we're looking for it to come down here, which would be 120.07, and then after that here, which I think this is where it'll end at 120.04, 120.03. It'll end very close to the 200 moving average on the 10 or 15 minute. Now, second power dot I don't like. So let's see if this continues to come down. And if it continues to come down, then this is a mid-range level, but it could be that they may stop here right before the news. And that's okay, because even if we pick up 15 pips before the news, I'll still take it. However, in the higher time frame, we're still looking at the fact that it's forming to the downside. So for all we know, they can come down, bounce right back up, and then come down. Regardless, I think that we're still in a very good position here based on the fact that 120.48 is the resistance in the higher time frame, not 120.50. Now, I want to explain why it's not 120.50, even though it's a whole number, and and it's here. What happens is that their algorithms are very unique in the way they've programmed them. So when there's a specific price level that's been defined in the higher time frame as a whole number, most of the time they won't hit it directly. They'll come very close to it, surpass it, and trade around it. But when you get a level that identifies, the trend of the trade or where it's going to be going, then usually that one will be between 3 and 10 pips away from it. So on the 120 minute, we defined it here. Now on the 180 minute, it was defined up here at 120.65, but they never hit this level. This level was never meant, never meant to hit. And the 180 was actually supporting the 120 and the 120.48 and the 120.50. So in reality, this was just meant to confirm or to give us the confirmation of multiple time frame confirmation, which is what we make our decisions off of. Now here, for instance, in the smaller time frames, and let's go to the smaller time frames, they've been playing this level, and this level, again, see how they broke right through it? This is a mid-range level. This is not a real support or resistance level, and it hasn't been used as one. This one is a support level. So 120.23 could be our next potential support level, and I would respect it because they did use it, around 3 a.m. my time, which is 6 a.m. Eastern, in order to define the trade to the upside. So here we're still waiting, they're still playing around, and that's okay. I don't mind the back and forth, but at the end of the day, they still have to really drive momentum up in order to make this thing go against us. And I just don't think they got what it takes at this point right now. But on the 2-minute, look at this. On the smaller time frames, this said short. Now it did stop here, no question about it, and that's why we're seeing a lot of this nonsense. However, it's now within the moving averages, and so you're seeing a turn. Now, I don't base my entries and my trades off of moving averages. Why? Because they're late. However, sometimes they play very well with our power dots and our pivots, and so it allows us to define a trade a little bit more precisely than normal outdated indicators. So I guess my question to you is, when you really look at this trade on a 10 or 15 minute, would you have gotten in this trade under normal conditions without knowing that you had a daily level here of power dots, a 120-minute level here of power dots, a 180-minute level here of power dots? And again, we're going to see them play back and forth, back and forth. For all we know, this thing's just going to come and retest, and you see how the trend dots here, this is a trend stop, but the trend dots here started to turn. Well, this is important because what was determined here was time. The fact that they took their time to rebalance their risk to the upside. So that means that the buyers had to offset their positions here, and the sellers were not really interested in selling above this price level. They did it, but then they decided not to, and when they pulled back very aggressively and settled right below this price level. And then you can see how they traded, and let me expand this further because I want you to really see this. See how when they came down, it settled right below 120.50, and then these candles just kind of went up again, but it settled below this one, not even up, it just settled below the 120-minute. This one went up, but never really settled above, settled below it. And this one, and then it just started to become a downtrend. Now we're all the way down here, and it came all the way down here. So they went from from 120.49 all the way down to 120.39, which was a 10 pip range, which is not bad, but we're looking for something a little better right now. We're looking for 20, 30 pips. I'd love 40 pips, quite honestly, but it's what they're doing. So let's take a look at volume, because I think volume is going to be a deciding factor for us here. Let me pull this indicator out. Okie dokie. And this is the reason why I like doing these sessions, because it's good training. It allows you to see something different that you've never seen before. It's hard to accept an outside of the box theory and a different way of trading, because what we try to show you here is the institutional mindset and the decision process behind it. The institutional mindset is digital. It is not human. These are programs, and they base their decision off that. Now here, for instance, you can see the volume peaked here, and then basically had volume divergence. And it's been, and it came down, but of course now, we have the same thing here. Now here it was bullish, as you can see, and it started to diminish. Now this is an indicator that basically works as a heat map, and I call it the sentiment. And the reason why, because it does give you the sentiment of the trend. However, in this case, I would have never gone short based on the fact that this was, so strong. But yet, seeing this here, I would have gone short here. So if I would have based my decisions off of this, I would be doing it the wrong way. It's like here. Look, I'll give you an example. Here, and I use this not as a primary indicator, but as a secondary indicator. I use it to move my stop loss once it goes my way. So in this case, upon this trade coming down and this going bright red, then at that point, if I have my stop loss up here at 120.50, 121, then at that point I would move my stop loss to, let's say, 120.32 once it breaks that level and comes down. So that to me is a defining factor. So let's take a look at volume. And what we did with this volume indicator is that we've synthetically created volume in this market because Forex doesn't have a centralized exchange. So let's be honest about that. It's very difficult to, to define volume when you can't really see their, how much money they're really playing with, and it's in the billions, but I'm going to show it to you in the millions. So here, for instance, this candle right here, when it hit this level, and this would be the first one, is at 166 on the buy, 151 on the sell, in terms of 15 million. Now that 15 million in surplus volume is what you question, and the question is, why did they not fill those orders? Why did they not balance out to zero? The way we defined and the way we created this is very simple. It's adding and subtracting. Nothing more, nothing less. You have your buy, you have your sell, and then you got your net. And that's it. And if you can add and subtract, you can read volume. We wanted to make it as simple as possible for you to assess. Why? Because that 15 million, 1.5, that was not filled were actually bids by the buyers bidding above these price levels, and the sellers didn't fill them because if they did, then this would continue to be a bullish trend, and maybe that's not what they wanted, and they proved it here in these next few candles. So here in this one, they threw the kitchen sink, and these are the candles around these price levels where they do their high frequency trading. Now, to the human eye, you can't really see it because it's inside the candle. So for instance, how can you see that this candle, which has moved from 120.44 to 120.52, which is, my God, 8 pips? In 8 pips, they moved 201 million to the upside and 161 million to the downside, and netted out with 40 million. Now that 40 million is even higher than the 15 million on this one. Why didn't they continue to go up? Why didn't they offset those orders? Very simple. It's simple math. The sellers did not want to offset those orders and fill them up here because they were not going to let the buyers dictate to continue to be bullish in this market. So they came and took control. And they said, no, the buck stops here. So this one here, you can see how they started filling less orders. You had 113 million on the buy, 202 million on the sell. So the seller started to offer lower and lower. Now you had a difference of 88 million, but the buyers didn't want to bite on the negative. And so that's why it held right here, because they didn't want to fill those orders, because then they weren't ready to let this market come down. And that is the mindset and the mentality that we have to wrap our heads around. Now this next candle just continued to trade around this level and really didn't do much. It was a very small candle, but look at how small it is in comparison to these others, and look at how much volume they played. Still a lot of high frequency. 132 million on the buy, 109 million on the sell, a difference of 24 million. Now this is a bearish candle with bullish volume. And that's something that is very hard to wrap your head around and comprehend as well, because it's not logical. Well, you're right, and neither is this market. This market is illogical. And once you come to terms with that, then you can start to see it for what it truly is, and for the deceit that they play to induce traders to make mistakes, to lose money. It's not your brokers. These are the banks. These are their algorithms that have been programmed to basically fool the retail market. Now this candle here, 140 million on the buy, 167 million on the sell. Again, you got a surplus of negative volume, and it did come down, but not enough. Then you have this candle, 146 on the buy, 122 on the sell, difference of 25 million. They threw the kitchen sink at this thing. Why didn't it surpass 120.50 is the next question. And so you have to ask these questions, when they start to trade like this. For instance, this candle here, volume dropped. 79 million on the buy, 169 on the sell. Is it that the buyers are simply, they know that they're done for and that this is coming down? Yes, but the sellers still couldn't get the buyers to buy at lower levels. And so we continue. 101 on the buy, 102 on the sell. It balanced out. So this may be where it is. And normally our entry is usually on the fourth or fifth candle. So if this was 1, 2, 3, 4, 5, normally it would have been here, and the reason why is because it traded below the 120.48 level, and anything here is just noise. And then of course you have this candle which came down 120 on the buy, 208 on the sell, in terms of 97 million. And that 97 million is what we were looking for to break and come down even further to this level, but it didn't happen. And they've been playing chicken all this time. So now we're at 133 on the buy, 132 on the sell in this previous candle. A difference of 1 million. That's not a lot, but you can see how they're offsetting and balancing their orders. And now, of course, we're here in this new candle, and this one is almost over. You got 92 million on the buy, 115 million on the sell, difference of 22 million. It's not bearish, it's not bullish, it's just there, but we're positive, a few pips right now. Not a lot. Would it make us, any richer? No, not really. The whole point of this is to understand the direction of the trade, the reason why they took this trade, and how they manipulated volume around this price level, which normally was never a factor in your decision process. And so what we do is, with all this information that we analyze, we do one thing, and we do it very well. We remove fear and doubt from our decision process, because we know our risk. We know that our risk in reality is 120.51. Our entry is at 120.44. So that's, 7 pips, 7 pip risk. And if you do it when they're trading around these levels, and you know that they're going to, and you have multiple time frame confirmation, then at that point it makes sense to take risk on, because it's calculated risk. Trading is about calculated risk. You're always taking risk. There is a risk of loss in any trade that you take, make no mistake. You could be up 100 pips in one moment, and then you could be down 200 pips, if a news event came out. And so that's what we're looking for. Now, normally this thing, usually, the US yen has been following the Dow very, very aggressively, and the Dow right now is up. And so is this, but it's at a price level right now that is telling us cannot be sustained any further. And so now we're just waiting for them to bring in the momentum and the volume to drive this thing down. Like I said, 120.10 for me is a good target. And this is on the 15-minute, and you can see why, because that's where the 200 moving average is. 120.10. So if it does come down, we're talking 34 pips, which is not a bad trade. And what did they do? They went from level to level, just like they did here. They went from level to level to level to level. So, and here you can see how they did the same thing. They went from a daily level to a 600 level to a 720 level, another 720 level, and finally a daily level. So in reality, they went from a daily to a daily, and it's taken them 2 days. Now, I'm not saying this trade is gonna take 2 days. No, this trade to the downside, once it kicks, should take a few hours, and it may not, depending on the news that comes out. It could be very quick and very drastic. So that's another point. So when you're trading the news, if the question is, do the banks know what the news and the numbers are before they come out? Yes, they do. And they do based on how they manipulate price action around certain price levels, and how they manipulate their order flow and volume around these price levels. That is what makes the difference. So all we're doing is basically mimicking what they're doing. That's it. Any questions? This could be a good moment. before we look at anything else. Gotta love coffee. No questions? Really? I'm that good or I'm not that good? The New Zealand yen. Good question. Let's take a look at that. So remember, if you're in this trade, your stop loss should be at 120.51. Let us take a look at the New Zealand yen. Where is that one? Do I even have that one? No, I don't have that. Do I? Thought I did. No, I don't have that one. I haven't mapped that one out. Oh, no, yeah, I do. Forgive me. My bad. My mistake. Here we go. New Zealand yen. You're long, huh? Oh, yeah. Look at that. This one is on. It already came short. But yeah, right now it's at a support level and it's acting pretty drastically around 76.14. Now, here's what I don't like about this trade. You see how the trend dots came in at an angle very aggressively? Well, even though it stopped here, my fear is that they would use the trend dots as a resistance level in these next few candles and then come down like a stone and break this level. That's my fear. But let's look at the small time frames real quickly. And actually, I'm going to have to remove the volume indicator because it is taking up a lot of data. So let us remove this bad boy for a minute because it is bad, but in a good way. All right. Let's see. 5 minute. Here's the level right here. See these power dots right here? This is a defining factor. And this is 76.18. So if it breaks it, then it has to come up here to 76.27 if it fulfills. So we'll see if they decide to fulfill because they played around and pulled back. It's one of those where you sort of question the validity sometimes. Now that's a 5 minute. Here, for instance, see how they're bouncing right here off of 76.24, 76.25. So if it doesn't break above this, then it's got to come down. Why? Because of yen strength. That's what will make the difference. So, this level right here is a deciding factor. Now, this is in the small time frames. I wanted to look at the higher time frames and define higher time frame confirmation. Now, this was, the way it came down, a little bit off the wall, but you had these levels here on the 20-minute identifying short trade. And this, all it announces, again, is volume and momentum buildup. So let's continue. See the 30-minute here, how it formed here when it came down. Now here they have power dots here right off of this level. But again, this could be short-lived. So let us continue. 45-minute, you have them saying short, and they already went short. But again, you have support here and here, which is having a really hard time breaking it. Let us continue. 60-minute to the short, a continuation of. This trade was a great trade to the downside. If you get a signal at the end of the day and it continues onto the new day on a 60-minute and everything, and it's already begun to go short, you go short because it's telling you to go short, and they're going to go short, which is exactly what they did. They went at the open from 76.80 to 76.14. And this ended at around 10 p.m. my time, which is 1 a.m. Eastern time. So from 5 to 1 a.m. or 2 to 10, which is 8 hours, that was 76.78 to 76.14. It's not a bad trade. Not a bad trade at all. But again, right now, everything is staying short. And so let's continue and see if it continues on the higher time frames. 90 minutes it short, and it did go short. And now, like I said, I'm thinking that it could come down from that level. But we need more confirmation. Ouch, that hurt on the 90, on the 120. Now they already went and fulfilled the cycle to the upside, and they've been coming down, but it's still higher than this low. So this is a higher low. So if it breaks to the downside, it's because the news had to really, really be nasty and aggressive. So it's in the middle of a range. I'm not long and I'm not short on this one. At this point, I'm more speculative, just watching it. Yeah, I love the 120. It's a dangerous one to go against, and if you go against it, you better be correct in going against it, because otherwise it can bite you and it will hurt. It's like a rattlesnake just waiting to just, strike. And when it strikes, it really burns. So yeah, that level is a toughie, a tough level right now. And that may be a deciding factor, but like I said, we'll see. It's one of those that it's an iffy, uh, because of the way that it's trading. See, look, this is a 10-minute, and it's where it's at is right now. See, these pivots define a lot, because this level right here and is very defining. 76.16. Why? Because you have a wick here, you have another one here, and so it is an important price level, and they use it to define support and resistance. But if it comes down, it's got to come down further. So I don't see that it'll come down significantly a lot, and that may make the difference even for the US yen trade as well, that it may not be a significant big trade, but look, now it's trading right below our entry. And so, you got 5 minutes before the announcement of the news, home sales. So yeah, it's a good one to look at. I mean, the New Zealand yen already came down, and that could be a good sign. Let's look at the pound yen. I'm sure the pound yen did the same thing, or is on track to do the same thing. And again, this is its support level right here. But for all we know, it could come right back down here to 186.60. So not, again, a trade in line with the US yen. Let's see, Euro yen. The Euro yen, beautiful trade from level to level to level. And if it comes down, it's going to hit this level. And that's the beautiful thing about what we do, is that we define the real support and resistance levels that the banks use. I mean, these guys are treacherous, deceitful in every aspect of the word. There is no kind word for them. But then again, I want you to really think about it. Are they really cheating us? Or are they protecting their interests? If I look at it from the business perspective, they're doing exactly what you and I would do, just protect our own interests. And when you come to terms with that, then you can say, okay, I would do the same, because you would. You would do the same to protect your interest, which is not to let someone else come and outsmart you in your game, especially when you control all the chips. That to me makes a big, big difference, So, but here we try to describe the game for what it truly is. This is a chess game, ladies and gentlemen. It is one that is played to deceive you and me, and it's played for money. Their programs are basically created to play chess, to outsmart you and me, because we don't understand the rules. Now in chess, if you play chess, and not everyone plays, I learned how to play chess when I was small. I was about 5, 6 years old. My dad taught me how to play it, and he didn't do a good job of teaching me how to play it. I ended up, I would ask him to take me to the library, and I would take books out. I'd read on chess, and I discovered one thing on my own. So I loved reading when I was small. It was just a good habit that I developed. My father taught me that, is that A good chess player is usually 10 steps ahead of his opponent. Well, in this game, they are 10 steps ahead of their opponent. But if you know the rules of the game the way we do now, we are playing in line with their rules and their game. So they can't see. It's just like, I'll give you an example. When you look at support and resistance and you look at how we analyze volume around it, I call it volume price analysis around specific support and resistance levels. And why is that a defining factor? Because that's exactly what we do. We analyze price. We analyze volume around price. That's what we do. And that's how we define our entries. There's a saying, if you can master support and resistance, then you're a master of the universe in trading. Why? Because you can trade any market, whether it be stocks, forex, futures. It matters not. Nadex now. Nadex is defined on how we trade and what we do. So look, is it fair to say that they knew the numbers before the announcement? Look at how they're set up to go short. Because they're set up to go short right here. Make no mistake, upon the announcement within a minute. And they already began to go short. So let's see. Let's see. Right now we're up 10 pips if I'm not mistaken. No, yeah, 10 pips, 10, 12 pips. So we look for these opportunities when they are at specific price levels in higher time frames that matter. Oof, there it is. The news came out and look at that. That thing just spanked that price. Came down to the 50 moving average to 120.28 in one candle. So let's see what the numbers are. And the numbers are negative. Like the French say, negative. And I'm so forecasted was 550 million. It came in 531. Negative, which is not good. So, however, still, I'm thinking they're going to play around this price level, and this isn't defined completely yet. But if I wanted to get out, this would be just as good a moment as much. I've proved my point. Now they are trading here within the 5-minute. Expectations would be for them to continue to come down. That's what expectations would be, and we'll see, because, like I said, sometimes the news may come out, but they may not play that game. Now look where they came. They came right here to this level, and this level is pretty defined if you really think about it, because it's defined here as to be the next level where they would normally go up, and they bounced right off of it very aggressively. I don't like when they do that. I like it when they break through it. If this candle would have come down and settled below 120.26, I would have been a little bit more happier than the way that they played this trade. So they proved their point, which is, not a bad thing, that they knew the number before it came out, and they did, and they played it to the downside. So now we just have to see how this plays. Okay, so let's stop, reassess. You hit this level right here, look at that, right there. Again, defining price level, 120.26. And because they didn't break below it, now it's bullish. So now I'm afraid that it may be time to exit the trade, unless we see proof of it coming down. So we'll let it play for a little bit. I always like to give them a chance to prove themselves wrong and to prove me right. But they already proved me right here. So, another one, maybe let's see the New Zealand yen. Hell, that one moves a little bit more aggressive. Came down, based on the news, still down. Let's see the euro yen. This one came down, and look, it came. Let's go, 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 go. 15. Yes. And it looks like it wants to come down here. And if that is the case, then yes, the US yen is in play. Let's look at the pound yen. I've got to map this one out. Yeah, it looks like it has a potential to come down to this level. And look, this power dot lines up with these pivots. That makes it a nasty but nasty level. And if they hit it, if they don't break below it, they're going to stop like a stone. That is your brick wall right there. So again, it still seems that momentum is to the downside. I'd like to see a little bit more momentum, but here, the problem that we have here is that even though we are in the right trade, we're not in the wrong trade. Forex at this time of the hour has a tremendous lack of liquidity, not volume, but liquidity. And that's a problem. And that's the reason why, sometimes these trades take forever and you're like, come on, move, kick already, give it up, and you get emotional. And we can't get emotional about the trade. I love getting emotional about the trade, but can't get emotional anymore. You have to look at it for what it truly is and be very metallic about it, because that's really what must be done. No question about it. It is very hard to not get emotional in the trade. Very, very difficult. Look at the Swiss yen. I mean, this one came down like a stone. There was no forgiveness on this one. They said you're going down, and they came down. They went up first, and they came down. And they came right back down to where they opened. Right, exactly. Close out the trade and then later it moves to your target. Exactly. Very, very, very true. Very deceitful. God, I hate these guys when they do that. So let me look at something here real quickly. Move over. I want to look at something. I'll be with you. So yeah, no, it's, again, like I said, they knew the news, they hit it, but they may use it opposite of what everyone's expectations are. And that is the problem. Everyone's expectations could be that it would have to go short. And you're like, why aren't you going short? Come on, go short. And maybe they're just not interested in going short. Bottom line. Okay, now, this little pinky is telling us that this has a lot of resistance here. And normally, because it came down the way it did, that it would have to come down to 120.14. Now we're thinking 120.10, but 120.14 is in line 13 with this level, but it's not doing that right now. Look how it's trading right here. It came down to this level and bounced right off of it, which is 120.26 to 120.27. So that's where it bounced right off of. So I don't like that. I'll tell you what my son tells me when my 4-year-old, when I scold him and tell him that he did something wrong, he goes, I don't like that. Well, I don't like this either. Um, but again, we're going to give it a little time to play. Got to give it a little room to breathe and see if it plays the right way. Now, here, for instance, see how it's trading right here? This is a defining factor for me, because if it surpasses this price level, then it's bullish. And I got no more business staying in a short trade at that point. That's really the bottom line. So you have to look at it for what it truly is, but it could hit the brick wall right here, and we'll see if this is a brick wall, 120.41. And if 120.41 is the brick wall, then I want to know about it. But if it's not, then, it's time to walk away. Walk away. Or change directions, because that means that the next level is up here, 120.65, and that means it could go long. So, we're at a very key turning point right now, where we have to make drastic decisions. And you can see how this was when they turn purple like this, that means they threw the kitchen sink in volume here. So it's one of those where we just have to wait it out and see. But see here on the 5 minutes, see how the trend dots have been coming down, down, and even here down. And normally I would say short right here, but here they're coming back to retest the trend dot. So if it retests and comes down, then I'm staying in, because then at that point I know that it has to come down. It's got to, but it doesn't have to. Yes, the support and resist, yeah, the Phoenix Zones indicator, and this one does help out a lot, because this indicator is great from the perspective that, number one, when it comes out, normally it'll give you insight as to the direction of the trade during the European session, where it's going to end up at. But more importantly, during the US session, is that it also helps because it can show you where it's playing and what your expectations of that trade could be. And in this case, if this thing does come down, and again, we 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 think in probabilities, okay, not in certainty. We cannot be certain that it will come down to 120.14. It's the probability that it could come down, and the probability is high based on how they're trading. So if the probability is high in our favor, then yes, 120.14 is right here where this moving average is. And I told you, if it comes down, it's because it's going to come down to hit that 200 moving average. Now, would I base my decision to enter this trade off of the 15 moving average and know that they have to fill this gap? No, never. We got in. Where did we get in? We got in right here. This is where we got in. And in no way did we get in based off of the moving average going short. The moving average was long, and so was this one. If anything, many people would have said, I'm going to go long as soon as it bounces off of the 50 moving average. That's what people normally would say. Let's be honest. When I'm going short. So who has a little bit more insight? Me or everyone else? I'm not a wizard. I'm not a master. But I respect their protocols. I respect their decision process. I respect how they manipulate and report their order flow and volume around certain price levels. And I respect volume price analysis, which in actuality is volume spread analysis, which was created by Richard Wyckoff, except that he had one thing missing back then: technology. He did it all manual. And he made millions, and then he lost it all. He died a poor man. Why? Because he was very predictable. His method was predictable. If he would have had technology on his side, he would have become probably the first billionaire back in those days. And he made millions. So he was a multi-millionaire at one point. So, yes, can you use our method and our technology to define high probability trades that can go in your favor? The answer is yes. If you noticed, we didn't do a lot of steps. I try and simplify it as much as possible, and even more. I'll give you an example. Here, let me see. See the market analyzer? We've even programmed this to tell you when it's in congestion, when there's a wide bar. This is a wide bar. When they're trading around certain power dots. In this case, we're looking at the US yen, and it's in congestion. What is congestion? On the 15-minute, between the power dots and the trend stop. That's congestion. And when they're trading around power dots, it says analyze me, analyze me, analyze me, analyze me. So this is an alert system created to help you look at all the pairs that you're looking at. Futures, if you're looking at, and I don't really want to look at futures today. I really want to concentrate on foreign exchange, because I think it's much more important right now, because really most of you trade FX. I am going to start to run a futures room, and I'm thinking about starting it next week on Tuesdays and Thursday mornings, very early. at around 8:15 a.m. Eastern to look at E-minis, to look at currency futures, to look at gold, silver, etc. So I'll keep you posted. You'll get an email to register for it. But yeah, again, we're looking at the same thing. Everything is the same. Nothing changes. Nothing changes. The only thing that's changing here is my decision to stay in the trade because I needed to go below this price level. Has to break now. It already broke below this one, which is very good. 120.40. I said earlier 120.40 is a very key price level for us. And if it trades below it, and if this candle trades below and comes down and settles below it, it's on, baby. It's on. Define wide bar. Well, this is a wide bar. For instance, a lot of bullish volume comes into it, and that's why it looks this way. When it's filled solid, it means it was bearish, but in this case it was bullish, and that's why it looks here. This is a wide bar. That's all it means. It's nothing special beyond that. But when the wide bars come out, normally they'll break through levels. Like in this case, see, this is not a real support or resistance level. This is a mid-range level because they've broken through it before in the past. Any questions? Now would be a good time. There's never a bad question, guys. Just remember, never a bad question. Now, mind you, this move has already been defined since early on. This thing went from 119.76 all the way up to 120.56. Let's see how many pips is that. That was a pretty drastic move during the European session. 81 pips. I mean, what we're, if upon this thing coming down, which looks like they're going to play it to the downside, expectations are 120.14, 120.13. But look at how long it's taking to do. And sometimes what you need to do if you're in a trade and you know that it's going to play, then you don't want to be in front of the computer. You want to place your trade, define your stop loss, which is your risk, what you're willing to risk in a trade, and either put a trailing stop or put a take profit target. Question. Okay, we got two questions. No, pin bars don't mean anything. And Steve has a question. Does a wide bar suggest a lot of unfilled orders are sitting, waiting to be filled when price returns? No, it doesn't mean that either. What they do is that they basically just, it's in our industry, when a specific currency pair moves drastically, like in a wide bar, is because they pull all the orders there, and they go to the next level, so to a specific price. So in this case, that's what they do. Now, these wide bars also define certain price levels that will be broken. For instance, see how they broke through. I'll give you an example. See where this pivot is right here? See where this pivot is right here? When you look at it, when you put these, and it's very important to really look at it. Let me maximize this because this is going to be really interesting. I want you to really see it. No. Okay, so here, for instance, this is a price level that we're looking at. See how, see how it formed here, and then when you go here, see how they used it as a support level, never really hitting it completely. See how here it's defining once they break above it to go long, and once they break below it to go short. Well, see how it came right at it and bounced right off of it here, this wide bar. That was a defining piece of information. Normally a wide bar, if it's going to break a level, it'll do so very aggressively and take you to the next trading range, which in this case, see how when it broke through, it took us to a whole other trading range right above it? Well, that's how wide bars are used. They're used to demonstrate breakouts or define where the breakout is. And that's basically how you use the wide bars. Now, in this case, it never broke above 120.39, 120.40, which we said was a very, very important price level for us. Very important. So that made the difference. That made the difference. So again, we're up 10 pips, whoopee, jump for joy. But they're the most consistent 10 pips that you would make. Now, we'd all be happy if this comes down here to this level, because then we'll be up 30 pips. And then we'll have a real smile on our face. Any questions? See, if we would have been trading this during the European session, we would all have a smile on our face because we would have taken this trade long from this level and said, oh, really? Especially after it broke through. This wide bar was very defining, just like this one. See how this wide bar broke through this level and then defined resistance right after it? This is a sign, go short. This is a sign, once it goes, and this is like a little saucer, but see how it broke through and then price just came back, and then at this point it never traded below? That's a sign to go long. We don't have that here. We don't have any wide bars here, but we do have, other important factors in the smaller time frames that define. So again, if it comes down, expectations are around right here. And why? Because see where price ends right here, how they use this as a support and resistance level? Well, this is right back where they started. 120.14. Question, 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 question. How many trades do I take in this trading room? It depends, depends if I see a lot of them. Sometimes, I'll take 3, sometimes I'll take 4. Today I wanted to teach you guys something that would hopefully make a difference in your decision process, something that maybe you have been unaware of. So I wasn't really coming in to really trade today, more to show you today, but to show you with a live example. There's nothing better than putting your money where your mouth is, putting it to the test. Question. Okay, looks like magenta wide bars are those which have exceptional volume. Yes, where other long bars are not so volume heavy. That is correct. Yeah, Mondays are usually slow too. Exactly. So again, we're back to square one with these guys. They just don't seem to want to play. And this, what I don't like about how this one settled is that it settled above this, and that means that it's not going to come down any further. It came down to where it's supposed to, and it's pretty much done. So there's nothing more to be said or discussed in this. Looks like it's going to reverse and go long from this point. So let's reverse it and see if we're right, because this power dot right here said a lot when it came out, and it's not the first time that we've been here already. I mean, it came down once and it just didn't want to do any further, and it's been playing around that level for a while. So if it breaks above, and it's already trading above 120.40, it's at 120.41 round right now. So if this candle closes above, then long goes. But at least we know that the next level will be here at 120.64. See, now we're positive. So sometimes, like I said, you just gotta wait. Let them give you the trade. They're gonna give it to you because they don't have a choice. They're very deceitful from that perspective. And so when they came down, we saw this was the news, but they didn't fulfill to come down any further, and they attempted and just didn't play. So sometimes you just got to be a little bit drastic with your decision process and move on. So let's move on. Let's take a look at the New Zealand CAD. This is one that no one trades. And let's take a look at it in a higher time frame. I haven't mapped this one out. Now it did come down short, and look at this wide bar here. This is where they threw the kitchen sink and gave away. Whenever you see a wide bar before power dots, that's them showing really how stupid they are, because they are literally giving you the trade to go short because they're throwing the kitchen sink at it. You're welcome. It says good learning about trade dynamics from the pure view of the big guys. Eager to see you at work on futures next week. Me too. Yeah, what I'm teaching you is how to trade with the smart money. See, in our industry, we call the smart money the algorithms and how they trade, how the banks trade. That's the smart money. And that makes a big difference. And that's what, we look for. So take a break for a minute. I'll be right back. Don't go away. Okay, let's go back to New Zealand CAD. Yeah, see, I wouldn't take this trade right now. We're late. When you're late, you're late. So let's scroll through these real quickly. Question. By Patrick. So the purple bar, wide bar means what the one side or the other has gone all in. Yes. Great assessment. That's basically it. When they do that, then you know that's how they're playing. See, we're late on this one. Wouldn't touch it with a 10-foot pole as well. See the US CAD, bounced right off of this level. This one, very important while we were messing around with the yen. This one played. And look at this. Right off of a daily level, right off of a 720. They broke through it and they went aggressive. And then they went. This one went from 131.80 to 132.36. Good trade. Not bad. Not bad at all. Great trade. Good signal here on the 15 minutes come down, but too late to touch it. Already played out. New Zealand yen, no signal there. but we were saying that it was going to go short, and it didn't quite fulfill. So now looks like they're setting up to go long on this one, but not yet. You got to wait for it. New Zealand CAD did go short, but no trade right now. Pound dollar. Now this one was a doozy. This one, look at how this thing is traded. Went up, came down. As soon as they broke below this, see how they went aggressive down below it? And then they came down, they retested here at this level. See where the power dots, so that you could have had a trade from 155.50 all the way down right now to 155.07, which would have been about, a good close to 45 pip trade on it earlier this morning. So yeah, I mean, they go from level to level to level. You gotta love what they do and when they do it. You know, the yen pairs are showing reverse across the board. Yep, we saw that. We can go back to the yen, to the US yen, of course, and we saw that, it's a reverse bar. But they had to fulfill their cycle and come here. That's why I said I don't make my decision process off of the moving averages. I base it off of price analysis and where they're trading and how they're trading. So we knew when the news came out, they did go short, but not enough to say they're going to come all the way down. It wasn't fulfilling, was not fulfilling in any form or fashion. Pound CAD, no, I wouldn't touch this. Nah, it's disorganized. I don't like disorganization. See, this one was off of a weekly level that they went long on the pound Aussie on Friday. A weekly level. And then continue. And see how this bar made a big difference? And then they used this as the support level, which was a 50% retracement. So if it was a Fibonacci level, you could say you could have used this bar for your fib levels and said, okay, that's a 50% retracement. They're going to go long, which they did. They did the same thing here. Aggressive little devils. When they broke through, they broke through. Never looked back, came back, settled, boom, boom, hit this thing once, twice, 3 times, 4 times, and on to the next level. So yes, perception of the trade is important. And once you understand the game, then at that point, you can say, I got this. Look at the euro. Beautiful trade. I'm talking this was a gift from heaven. God was shining on someone when they took this trade down. And you see, these levels that I've drawn here, I drew here in the higher time frames. And let me show you the way. Let me show you the way. I like the way. When you get philosophical, it feels so nice, especially when you can prove your theory. And I've been working so hard to prove my theory that now that I have, I'm like, oh my God, give that man an applause. So Patrick says that's very impressive just by itself. Wide bar, the item in my view is worth the price of the software. Yeah, the wide bar. If you understand the wide bars and you understand support and resistance, my God, man, let me give you a high five. Now you see these levels that I drew here. These blue lines are monthly. The brown ones are weekly, and then the green ones are daily. So let me show. This is the weekly, but let me go to the monthly so that you can see. Now, this one's a little hard. Ricardo knows what he knows. Thank you, Hank. I appreciate that. We got to talk about your training session. Today is not good, but tomorrow is better for me. Tomorrow morning. I got to take my son to speech therapy today, and then I got to take him to preschool, and then I got to pick up the other one from college, and well, it's just going to be interesting. Trading has given me the ability to dedicate time to my kids and my family, and allowed me to do things that normally I wouldn't be able to do. But it's not easy. Never will I say that it's easy, because it's not. Oh no, I did not. Son of a... This is my fault. That freezing on that is because my other indicator, the zones indicator, doesn't go beyond the minutes. I can't show you. It's going to take forever. Yeah, see, it froze. Damn it. I was afraid of that. Oh, God, it affected mine. All right, so this is what I got to do. Don't kick up. I wish I could kick it up. I actually have to close it down right now like this. So bear with, and then reopen it again. And that's my fault. Oh, God, kick me. I apologize. Bear with, bear with, bear with. Yeah. Bear with, bear with, bear with. Come on, come on, come on, come on. I'm going to show you a picture though. Whenever you see a brick wall, that you've hit a brick wall, you probably have, because you're lacking information. We're going to show you how to break that information and move on. It's not as bad. Oh, that's right. When it froze on us, remember? Lock up. It locked up. It was just outright nasty when it did that. All right, so let's connect the next one. Da-da-da. There you go. Come on, come on, come on, come on. Okay, beautiful. Give it a second. Give it a second. Come on, 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 come on. Load, 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 load. Not done yet, but almost. Almost. Any questions in the meantime? This would be a good time. Let me go down to the small minutes, make sure that indicator is not on. It's not. Okay, let's move. We were on, what currency pair were we on? The euro. Euro, 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 euro. See how it whispers to us? It says euro, euro. I know, I can be funny sometimes. Let's go to that monthly that we talked about. So all our levels are right here, correct? Now, see how I chose some of these levels? Now we're going to go into the weekly. And look how they went from, see how this wide bar, look at this wide bar. What a beautiful thing when it broke through. Then they used this as a resistance level, and then they came down. And they went up again, they came down, and then they went up again, and they came down, and they've been playing this little game left and right between 114 even and 108.14. So what we have here is, and now we're going to go to the daily. The daily just looks like the bomb. See, look at this. See how weekly, daily, 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 weekly, daily, weekly, daily. No monthly here. None of the monthlies are here. But you see how they've been playing around these price levels. Weekly level, boom, down. You know, to a daily. Now it's to a daily. And it's going to stop right here. Right here is where it's going to stop, because if it goes below this price level, it's got to come down here to 111.35. So I'm saying they're going to hold it right here at 112.05. Let us see. 112.05, and it's coming down. Look at that. What do you see here? A monthly and a daily level. I mean, it's just sort of slapping you right there. It's like, no way. It's like impossible. Well, it's not. It's possible. This is a 30-minute, and look at this, right off of a daily level. And they're going to the monthly. And if they break below it, it's got to go down even further. We just said that. So that would make this trade the bomb. So let's say that you're trading Nadex binaries, and you're seeing they're trading off of a daily or a weekly level. Are you not going to throw that thing out further? Because they're going to give it to you. Make no mistake. You see, here's one of the things that you have to understand, and let me take you here. You see these price levels that I've defined as support and resistance levels? And really, their protocols have to follow a specific programming, and they must conduct themselves around price levels very religiously. And I mean religiously. Not because they found God, because no, they haven't found God. These are computers, and they don't know what God is, nor do they care. You and I care about God, because if we're in a losing trade, we're praying, oh God, please bring it back. I promise I'll never take this trade again. Just please, please make me whole again. And we find religion in the wrong way when we trade. I'm going to show you how to find religion in the right way. We say, thank you, Lord, thank you. Why? Because you're not going to look at it the wrong way anymore. You're going to look at it the right way, or hopefully look at it the right way. And you're going to look at it with calculated risk. The term that we like is calculated risk. That is what we like because that's how they play. So look how they're playing right at this level. But here it's even more defined because, and we'll go down to a smaller time frame. We'll go down to a 10-minute. Look how they're, I mean, they hit the level and they've bounced right off of it. Now, if your question is, why don't they break this level? Because if they break this level, it's a no-no. They got to go down even further, and they don't want to. So if your question is, are they going to go long from this level, Ricardo? We're going to wait and see if they go long. Now, if you were really aggressive in this trade and you knew that you would only be risking 5 pips, you could say, as an example, no buy, hold, sell trade recommendations. But you could say, you know what? I don't think it's going to go short anymore because on the higher time frame, they're not playing this game. So I think I'm going to take this long, and my risk is going to be 5 pips. So as an example, if that is the case, if they don't go down, then I'm risking no more than 5 pips. And if they do, then, I'll take a minimum loss. But if I'm right, and they don't, because they're hitting, where's my picture? A brick wall, then at that point, we know why there's a brick wall. The monthly and daily are right there. Saying, no, stop right here. For this, I let you in on the European session to check it out, for about 2 weeks, and then I charge you. Charge $197. I don't apologize for it, because unless you own the software, then you're in for free. So if you buy the software, then everything's all good. But beyond that, I don't let you go beyond that because I only do the European session once a week, which is Thursday mornings, Eastern time, 2 a.m. to 4 a.m. for 2 hours. And I look for specific trades, and then that's it. It's over and done with. But remember, this trade, like I said, I won't expose more than 5 pips. Now, it's got to bounce from this level, and it has to bounce religiously from this level. So this next candle, these next 2 candles will be a defining factor for me. So I'm going to put in the chat my email. Why? Because some of you are going to want it. Some of you need it. And my email is ricardo@phoenixtradingstrategies.com or info@Phoenix. Write that down. Phoenix Trading Strategies.com. If you have questions and you want to call me, feel free. My number is 818-431-1357. There's nothing better than speaking to someone and asking your questions. Don't be afraid. I don't bite. And I'll put my Skype. If you don't want to make a long distance call, you can reach me through Skype. I am usually available. This morning's will be a little tough, like I said, as I got to take my son to speech therapy, but no biggie. Yes, it is this Thursday. So if you want to sign up for it, send me an email. I'll sign you up for it. And last Thursday didn't do it because I had to do a webinar for NinjaTrader, which I'm waiting for that. It was on support and resistance, how to confirm support and resistance with volume. And we went over quite a few examples, which I thought was good. I think it's a good video to share with you guys. I'm waiting for Ninja to post it on YouTube, and then we'll send out an email so that everyone can take a chance to look at it. It was very good. We took a while, but it was very good. It was very, very good. So if there are no questions, ladies and gentlemen, I think that we are done for the day. And again, we're looking at them to bounce at the brick wall right here, 112.05. 1205. Why? Because there's a monthly and a weekly level. So it's a beautiful thing when you understand where the brick wall is, whether it's on top or whether it's on the bottom, but they got to hit a brick wall. Perception of the trade is everything. But perception of the trade, yeah, we'll give you a call, Hank. But perception of the trade with proper information, that's when you know. That's when it's on. Target on it. Exactly. The target is right on that bad boy. So, want to thank you so much for joining us here at Phoenix Trading Strategies. It has been nice this Monday, and unfortunately, we just didn't see a whole lot. But let's take a look real quickly at that USN trade, see how that thing's playing, because that thing was a little deceitful. But oh, look, it went our way. Like I said, they bounced, and they came to this pivot, which is right here. So how many pips from our entry? Let us take the ruler. Let us measure. So it went, no, that's not 17 pips, is it? 120, 120.41. Oh yeah, it is actually 17 pips. Not a big trade. I still think that this thing has room to move, to the next level. And we talked about that next level being up here. God, it was at 120.65 right here. That was the 180 minute. So let's see. Yeah, that brick wall on the euro is the current monthly and daily level. So I'll send you an email, Hector. So yeah, very nice trade. Can't complain. Again, like I said, now it broke above the daily. If this settles above, then it has to come up. So beautiful thing when you can forecast how these trades play. Let's see if this trade continues to the upside, but it should on the USCN to the upside. So want to thank you again for joining us here at Phoenix Trading Strategies. Don't forget, we will be back Friday morning for those of you that are signed up for the European session. I will see you this Thursday morning for me, which is night during the European session. And have a great day. Have a great week. And if you have any questions, feel free to email me. Feel free to call me. Talk to you soon. Bye-bye now.